Hi, welcome to EQD Research Global Insights for Tuesday, May 18th. Today we're going to check in on VIX, going to check in on the May VIX future. Today's the last full trading day before settlement for May VIX futures and options on the open tomorrow. And then we're going to go across the Atlantic Ocean. We're going to check in on VSTOXX and the VSTOXX 50 as well. There's an interesting divergence going on between VSTOXX futures price action and VIX futures price action. I want to dig into that a little bit. But before getting started, if this is your first time to watch one of our videos, welcome. If you like what you end up seeing, please hit that like button and feel free to subscribe. And if you want to be kept up with when these videos go live and with timely information, hit that bell so you get notifications as well. Now, the S&P 500 this morning's been kind of oscillating between up and down on the day. As I sit here, it's down 0.2%. VIX is up 60 cents to 2039, and the May futures are up slightly to around 20. Now, I did want to take a quick look at spot VIX versus the May futures over the time period where the May futures were the front month futures contract. And you can see that when VIX spiked middle of the week last week, the May future that only had a few trading days left did follow that futures contract higher. It's a good example of why, if you want to have exposure to VIX, probably the best instrument is the front month futures contract. Now, turning to the curve, I've decided to compare today's curve, or where we are mid-morning, with the Wednesday close of last week. Now, last Wednesday was when VIX closed up over 27, and the curve was inverted let's see, that was Wednesday, Thursday, Friday, Monday. In 3.5 trading days, we've come back to what is a normal-looking curve. Based on today's price change action, one thing to note is the June contract is the weakest one, down about 30 cents. It does become the new front month tomorrow. I think I'm going to do a little digging into what happens to the second month future when it becomes the front month future. It just seems like there seems to be a little bit more headwind with that future as people turn to the second month future as it becomes the front month future. And the balance of the curve, it's down slightly, but the weakest contract on the board, as I said here, is the June futures contract. Now, the volume is turning to June, already has over the past few days. Saw an interesting June option trade this morning with the June future at 21.75 and spot VIX at 20.05. Somebody did a 3-leg spread. I'm gonna put a slide up that describes this whole thing instead of the little thing below me at like normal. So they sold 2,000 of the June 20 puts for $1.64, sold 2,000 of the June 18 puts for 66 cents each, and then finished up the spread by buying 6,000 of the June 16 puts for 14 cents each. This 1x1x3, it's the best thing that I can come up for a name for it. It took in a credit of $1.88, and turning to the payoff diagram kind of looks like the Little Dipper. Which is a constellation out there. The ultimate goal for this trade is VIX to stay above 20, and all options would expire with no value, and you'd end up with the $1.88 credit. There is danger if June VIX settlement comes in at 16, which results in a loss of just over $4. And you can see that if we do get a big drop, there's actually profits to the downside on this trade, which come from the long 16 puts. I almost want to see a big drop in VIX to see if this trade's managed at all, and try to pick up on that, because buying the 3 pretty far out of the money puts at a price level that has barely been touched in over a year. I'm just curious as to why they chose to buy 3 of those instead of 2 of those, but they did the trade. I didn't do the trade. So turning to Europe, the VSTOXX 50 also pretty close to unchanged, up 0.05% as I sit here. VSTOXX is down 36 cents to 21.45. The May future is down a nickel to 21.70. Check out this VIX versus VSTOXX curve comparison. The VSTOXX curve is flat. This is the flattest volatility curve I can recall seeing in my decade plus of focusing in on these markets. Flat always equals uncertainty in my mind, so it will be interesting to see if the curve remains in this very flat shape over the next few months or starts starts to go back to normal contango. If we get a spike in volatility, it'll be interesting to see if the front month futures, if the nearer month futures actually follow that spike higher in VSTOXX. So just a trade that I came across in VSTOXX about 8:45 this morning with the July future. Looking out to July here at 21.55 and spot VSTOXX at 22.15. Somebody sold 1,500 of the 19 puts for $1.80 and then went down 2 strikes and bought 3,000 of the 27 puts for 82.5 cents each. Basically, you get a credit of 15 cents for each of these 1x2s. That would be the profit that's realized if we're over 19 at July expiration. If we do get a volatility crush, then this trade can pay off if we go below the mid-teens and down to the tweens. So interesting trade. Not sure if they're looking for a volatility crush this summer. But definitely, I don't know if the risk behind this is worth trying to make 15 cents. So there's probably part of this trade rooting for lower VSTOXX. Like I said with VIX, if we see a big move lower in VSTOXX over the next few weeks or even a couple of months for this one, it'll be interesting to check back in on this trade. So thanks for joining me for EQD Research Global Insights for May 18th. If you like what you saw, please hit that like button. In fact, if you stayed this long, you have to hit the like button. That's my rule. If you've got any suggestions, please put them in the comments section below. And if you've got a more in-depth question, you got suggestions about things you'd like to see on this program, feel free to shoot me an email at rhodes@eqderivatives.com.